Alright guys, give me 1 minute. I need to go to my channel here. Okay, so it's up. I need to get the chat up here. I saw my other one and it got cut off. Apologize for that. Again, I broke my monitor, my other monitor, so I used to have 2, now only 1, so bear with me. Okay, I think I got it here. Just wanna see. Okay, I think that's good. Do I see everything? Wee. Think so, yeah. Alright guys, I am back. Welcome to my channel. How's everybody doing? No one's here. So let's kind of kill some time here. I think this one is me. Now, oh, let me see. I think I have like Ryan Cohen here. Here we go. Okay, so that's that. So hopefully everybody's doing well. It's Sunday morning, 9 a.m. Not much here. I don't have anything planned. I don't know how long I'm gonna stay here. Maybe a couple hours here and there. Depends, right? So mainly I wanted to talk about, and I know what's up. Mainly I wanted to, let's do the price update. Obviously this is Sunday. The price hasn't changed since yesterday or Friday. So currently it's at $13.51. Right now it's a great price, but my thought is that they might bring it down in order to kind of create this double bottom, so to speak. Doesn't mean it's gonna happen that way. It's just my projection here, because when, you know, this is the type of things that they wanted to kind of ensue. Again, algorithm, you call it algorithm, call it, you know, just again trading psychology. You know, anytime when a steep drop like this, right, it scares some people off, right? Psychologically, you want to look into, like, you know, the lower low, right? If there's a lower low, and again, this is to ensue, to elicit people to want to trade, right? It's like, oh, let me sell it right now so that I could buy it lower, right? You could always buy it lower. That's the mentality that they want you to think. And that's why, like, trading to me is a bit counterintuitive, because, you know, and again, like, it's the famous saying from Warren Buffett. It's like, when, you know, when others are greedy, you should be fearful, right? When other people are fearful, you should be greedy. And that's the mentality. But of course, like, you have to pick the right company too, right? To me, you know, this type of advice, there's a qualification for that. How's your morning? Doing good? Yeah, that's good. Same here. But let's see. So my thought is that they are going to do that same. This is like the shenanigans right here, right? The gap up and all that stuff. And again, like, there's no reason for this stock to be trading like this. Now, I was watching something here from the Urban Finance, and it's kind of fitting, you know, a little bit. But hold on, let me see. What's this one? Oh, this one is a trading thing. Close this out. I think this is me. Close that out too. I was gonna watch this one, but there was one that I watched yesterday. Maybe it's not on this account. Hold on, you guys. I think Goldman Sachs giving trading advice or something. Goldman Sachs trader telling the truth about trading. I think that's the one. No, not this guy. There's another guy. Let's go Sachs. Oh, this guy right here. No, this video is pretty informative, right, on how I view trading. And again, you could be any kind of investor you want, whether you want to, or any kind of market participant, so to speak, right? The question is, which type do you want to be? Do you want to be the type that, you know, trade in and out, or a mixture of things? So that's important. And also to know who you are as a, you know, as a person. Like, are you antsy? Are you, you know, do you want the result right away, or you're the type that, you know, so again, different company would give you that the right path, right? So for example, if you are a trader, you know, this company might not be the right thing for you to do unless you've been following it and all that stuff, right? Because again, there's no volume and unless there's trading, there's earnings and all that stuff. So which is coming up in a couple weeks or so, and so there might be some more volume coming into, you know, again, depends on how well the company's been doing, right? You know, it's no secret that Gamestop has been beating expectation for 4 quarters in a row. 4 surprises, right? And again, that should account for something, but for some reason, you know, you could buy like a year ago, okay, the price was higher than it is today, but if you look at the company, like the health and well-being of the company is actually doing better. So the price is lower, but the company is doing better. Need I say more? So if you don't see the opportunity there, that's on you, right? But again, like, traders are very antsy about this company because that's how, like, if you're trading this, 1 second, I don't know why. If you're trading this and there's no volume, that's why they're here usually mad at the price of GME. It's like, it doesn't do anything, right? Well, because you're a trader, right? It's hard for people to trade this because, again, there's no volume unless there's earnings. Like, if you look at the earnings, every single time there's earning, you see this spike right here? That's volume coming in. Now, this one is lower, right? Lower volume coming in there. Perhaps, again, the quote-unquote, the media is successful at steering people away from GameStop, right? Because they don't want people to look at GameStop and then trading it, right? Because the minute that the volume comes back, this stock's going to do something unexpected, right? And I'm here for it, right? I don't know how long that's going to be, or how long Is people going to just ignore this company? Whether it's retail or institution and all that stuff, but eventually they're going to come back, right? Because again, the fundamental of the company is doing much better, right? If you post positive quarter every quarter, like, you can't go wrong with that type of sentiment. So my thought is that, Wall Street is not going to sit on the sideline, right? So those big guys, they're just as greedy as any of us, right? And even more greedy than any of us. So when they see a good company, yeah, they might poo-poo it, right? Meaning, it's a strategy that they do, poop and scoop, right? Pump and dump. So it's the opposite of pump and dump. It's famously, like Larry Fink, right? The BlackRock guy, the president of the BlackRock, who have the asset under management of like trillions of dollars, right? 10 trillions of dollars. And when BlackRock got into Bitcoin, you never know about how he was accumulating Bitcoin, right? What you were shown is him saying, "Oh, our clients doesn't care about Bitcoin, right? So we're not even interested in that." Right? And then fast forward 5 years later, it's like, "Oh yeah, we've been pivoting our belief in Bitcoin." The most recent one, go Google it. But my point is that they've been pivoting since 5 years ago, but you never hear about them buying Bitcoin at $16,000, right? You only hear the news telling you that, oh, it's going lower, right? When Bitcoin was $16,000, $18,000, when you should have been accumulating Bitcoin at that time. And now, when that's why when the ETF approval was on the news, BlackRock was all on the news promoting it, and that's why you see the price of Bitcoin shooting up and then dump immediately. I don't know how long it's going to run, or it's just going to stay at 52,000. Sorry, I always like talking about Bitcoin for some reason. Let me see. Yeah, so it's been kind of creeping back up a little bit, but I don't know. Again, I'm not in Bitcoin right now, but I'm still waiting for the drop. Again, like I'm expecting a drop in SPY, and also the conflict that is happening. But again, it might not drop; it might just gap and go. We don't know. Again, I'm just doing my own prediction on Bitcoin here because I know the cycle. And again, like I'm not a god, so I don't know what's going to happen in the future. But based on the historical data that I've looked into the cycle of Bitcoin, halvening is going to happen. I think before that happens, the miner's gonna be selling some of the Bitcoin in order to operate their mining rig and whatever. Or, if it really depends if they have the investor, coming in and raising money. On top of that, they might not, like Riot, Mara, and all that stuff. And again, I'm just like speculating on that. So I might sound like I'm more worse on that, but again, just do your own research. My thought is that they're gonna, the price is going to come down first before it hits the $100,000. And I think you have about 2 or 3 more years before Bitcoin hit $100,000 a coin, in my opinion, right? All right, how's everybody here? Hello, thank you. Fish and chips. I'm having pork sirloin. Wow, that sounds like a good lunch. Or what are you making? Lunch. Is Ethereum the Web 3.0 we are anticipating? It's being built. It's like when people think about Web 3.0, yes, it's been talked about for a long time, but again, it takes some time to build those infrastructure. Ethereum might not be the one, right? Because again, it still have its problem and all that stuff, and being the fact that you could edit the code and, change from proof of work to proof of stake. So, it's a layered growth type of deal. Just like how the internet was invented back in the 80s, right? But it wasn't fully developed until now. Not now, but like 10 years ago. That we are fully like, okay, we know how to use the World Wide Web and all that stuff. And so, it's going to take some time. I think it's before its time, Web 3.0. Not to say that, the acceleration of development is not going to happen. I think, yes, with the AI craze and all that stuff, I think that development is going to be, instead of taking 40 years, instead of taking, 40 years. Yeah. Because, like, I'm thinking about the internet, like the advent of internet. Back in the 80s, and even before that, it was like used in the military, right? And so like only the military was able to kind of like interact with the World Wide Web here. And so the same way with blockchain, right? Blockchain just came into the scene back in 2009. So it's been close to what? It's like 20 years, no, 16 years ago. And so the blockchain world, it's only been a teenager, right? If you were to think about that, while the internet is in its 40 already, right? And so it's going to mature on that. And then on top of that, Web3 is an infant. Like, it seems like Web3, we've been talking about it, maybe a toddler, I should say, toddler. We've talked about it since, ETH come into to play, but in my opinion, you still have a long way to go. And yeah, I think that's why GME kind of like ahead of its time, and that's why it's again, I might just be pacifying myself here on the on the NFT marketplace, so to speak, right? But I still think that there is a development there. Again, me speculating here. But Web3, I think you might have another 10, 15 years to go in order to get it to the scale of which, regular people are going to be able to be like easy accessible to the next generation. So, but yeah, the fact that you're talking about it or even aware of what Web3 is, that's you're ahead of everybody already, right? And which company is the one that is kind of on the leading edge on that particular idea? I know, like, people say that GME is not the first one, like they're not, visionary in that sense. So, like, well, at least they're the first one publicly traded company that at least thinking about it, right? So, if they're the first one coming out the gate doing Web3, think about it. You and I would not have the ability to invest in it, right? Because again, you have to be an accredited investor. You have to, pass that test. I don't know what the qualification for that is, but, to get into that gate, you have to be, $1 million liquid, not including your house. And so who has $1 million in the bank to invest in those type of company? So that's my thought, is like, GME is it if you want to kind of dip your toe into the Web 3.0 type of deal. But again, like, getting in early is just as painful as, getting in late, right? Because again, it takes some time to play out those type of thing. It's really kind of boring, right? But hey, this is why wealth building is it's not as easy as like, hey, let's put everything on call options, right? And hope for the best, right? If that's the case, everybody would be a billionaire by now. During that run, of course, like, retail was lucky, right? If you buy call option here, there's a couple of people who I'm sure, got massive amount of gain, hundreds of millions of dollars, or even just not hundreds of millions, sorry, hundreds of thousands of dollars, just buying a few call option back here, way out of the money call option. And back then, of course, like, people didn't know what's going on. Like, of course, we thought, well, I still think over here that the market was fair, and if there's only one thing back then, right, that was true, was that Wall Street was at least a fair market, right, and even exchange of money to shares of the company. That's what capitalism should be. But then, after the run and the removal of the buy button, that's when the Pandora box was open, like, to all of us, like, to me especially. And then that's when I start to dig on, okay, what's going on here? Is it really fair? Is it really, how are we being traded? How is the money exchange for shares work, right? And that's kind of a good segue to what I was gonna, but let me read the chat real quick. I was gonna show you how the dynamic between, the shares, like when you give the money to the broker, what happened to your money? And if you want to buy GME, does that mean you're gonna get GME shares or what? So I'll show you that in a minute here. Have you seen Ready Player One? I think I have. Let me see. I think. Hold on. Is this the one? Ready Player One. Yes, I saw that one recently. Actually, like a couple months ago. It was on free. Yeah. But yeah, that was a good movie. I think. Oof, I think it's a gruesome. I don't want the world to be like that, but of course, like, yeah, with the goggles, was it Google goggles? Google, the VR headset from Google. You've seen people are wearing it while they're driving, and that stuff. Like, that's scary. That's a scary world we're living in. But yeah, eventually, I'm sure in 80 years or so, when I die, 80 years from now, I could see that world's happening, if we're not careful, obviously, right? And the corporation's gonna find ways to exploit people addiction to whatever, like pacifying, It's like, it's a coping mechanism that we have, eventually. It's, again, there's always people gonna exploit the whole AI thing and the whole online VR and all that stuff. And yeah, maybe we're gonna be the one who, picking up ways to capitalize on that particular technology. But who knows? It might not be GameStop, right? It might be something else that could do it better than GameStop. Who knows? Right? But I'm willing to bet on Ryan Cohen and the leadership and all that stuff. So yeah, I did. People always tell me, be careful with what you do. Wait, be careful of what you do. I think most people are copying the innovation that Ethereum has already done. Most blockchain run their own version of Ethereum. I agree. I think some technology, some blockchain, they use, what is it, Ethereum virtual machine. Yes. One in particular is called Flare, right? Kind of related to XRP thing. I got some airdrop, so free token type thing, right? Just because I own XRP. But, the idea is there. Of course, like, they always want to make a better version of something, right? But I don't know, again, like Ethereum, I just have some a biased opinion on that due to Jay Clayton. The fact that he was like the SEC and kind of turn a blind eye on, turn the eye away from Ethereum and saying that Ethereum, like they don't go after Ethereum, right? And that's kind of like a red flag to me, because when you know that Jay Clayton is from private equity, right? Apollo Global Management. And so, you know, when that happened, it's just like, it seems like they're picking and choosing which one to let loose on innovation and all that stuff, even though it could be a security, right? But then they stifle the growth of XRP, right? And so to me, anytime they go after something like GameStop, for example, it's because, you know, it's actually a legit, right? Again, that just is me being biased. Being biased here. And so, again, like, it's neither here nor there. She said, I am the one, but the kid is not my son. Are you singing Michael Jackson? GMA is great, but how about those semiconductor stuff? I know. I mean, okay, if you're in it, congratulations, right? I mean, you know, people say, you're just jealous because you're not in it. Like, of course, if I'm in it, I would be selling, you know, way before it hits $800 a share, right? If I'm in NVIDIA, back when, you know, it was $100, I would have be happy with 5x, right? If it hits $500 and I'm already 5x my money, I'm good, right? There's no need to kind of like hold it past that. But congratulations to people who hold it past, you know, $800 or sell off of it. You know, it's the nature of trading. And again, like I don't understand how they pump it up that high, because again, this is like a multi-trillion dollars volume type thing. So in one day, it traded like $200 billion in one day, right? And so I can't help but think, what if just 10% of that pour into GameStop, right? And to me, that is a sweet thought to think, right? Because with just that 20 billion, that's like 5x from here, right? For GameStop. And it doesn't take much. Again, that's why I name my stream. It's gonna flip. The script's gonna be flipped. But how long? Like, just think of it like how long, how many shares can you accumulate before the script is gonna be flipped, right? And the reason why I think that is because, again, the fundamental of the company is going to come to play at some point. You know, when everything is falling down, you know, whether it's a crash, whether people are panicking due to world events or whatever, money is going to chase a good company, right? Good, sound company that has good, sound leadership, who thinks for the long term, not just, you know, 2 years, 3 years, 5 years, right? Ryan Cohen is here for the long run, right? And he said it too, like ride or die type thing, right? So when you have this type of leadership, at the very least, don't ignore them. Put them on a watch list or something, right? You know, it's the same way. It's like if you ignore Elon Musk, right? You wouldn't be able to take advantage of the Tesla run. I think most people who invest in him is very, very happy because they stick with him, loyal to, you know, I know like it's the cult of personality. That's why people in the media keep saying it's a cult, it's and all that stuff. But again, it's just common sense. If you have good leadership, you want them to lead, right? Why wouldn't you? Because the result is going to be a lot better for you, right? And on top of that, he's an actual shareholder as well. He has close to, 13% of this company? So what could go wrong with that, right? So he's treating the company's money as if it's his own. So if you don't understand that concept, good luck. Would you have been nice? It would have been nice to catch those gains. Yes, you almost would hate the money to speak again. Yeah, of course. Yeah. But again, like hindsight is 2020. Obviously, how would we know that it's going to run this much? And that's why I'm so convicted in GameStop too. It's like the gain is just like Moran was saying. It's infinite, right? Technically, and it's a matter of how long can you endure the hate, the the propaganda, so to speak, about the company being shitty, about Ryan Cohen being a terrible human being, even though if you compare Ryan Cohen with other CEO, it's night and day in my opinion, right? The fact that he's not taking money, taking salary, I mean, come on, like what not to love about this guy? The only people that are trying to deter you, it's again, this is their strategy, okay? Because they don't want people to know about this company yet. It's until they're able to accumulate the shares in order to buy to sell you at a high price, then they're ready to flip the script, right? Again, this is the strategy, poop and scoop. It's like, it's a nice way of saying, it's like they just pee poo poo it because they know it's the greatest thing, so that most people wouldn't think twice about this company until it becomes obvious. It's like, oh, we were wrong. Actually, we were wrong about Ryan Cohen. We were wrong about this company. They're actually posting a profitable, quarter this quarter. Perhaps, well, it's actually because they were cutting down to the bone. I'm sure the narrative is going to be like, oh, look, they're closing 500 stores this quarter. Like, that's not a good thing. You can't cut yourself to a profitability, even though they're going to show profitable quarter. Again, the mental gymnastic that people are trying to get you to do in order to make you think that this company is terrible is so comical. It's very comical. But again, like, I don't want to kind of flip to the other side either. It's like everything that Ryan Cohen's doing is great, right? Well, so far, I disagree with what he's doing for the company. I'll point it out to you if I think the decision of the leadership is stupid in some way, right? I have yet to see it. So, yeah. So, I don't know. Is it going to be $10 million this year? No, I don't know. Like, who knows? That's why, like, who would have thought NVIDIA would be $800 a share at this, it's ridiculous, right? So again, the overvaluation of things is happening because, again, everything is overinflated. So if NVIDIA could be egregiously overvaluated, then GameStop could do the same thing, could be the same thing, and more, right? Because again, the story hasn't ended yet, but they want you to believe it ended already. It already happened. Sell it. Why wouldn't you sell it and try to buy it later on, right? Price. They want you to think of the price, right? Rather than balance sheets. It's a lot. It's a lot less stressful when you're like, just ignore the price and look at this, right? This is where you should live. Every quarter, it's gonna keep you sane, and then just set it and forget it. Okay, let me go to what I was gonna show you. I know I'm kind of like babbling here. 7 people watching. Oh, I think. Now I'm all of a sudden nervous. Okay. But also to set in the chat. Who's lurking? Okay. Alright, Dynamite. Hey, what's up? This is Spooky. Okay. Alright, everybody's saying hi to Dynamite. Okay, if I see you and I don't speak, then that means I don't know what. Okay, I don't know what you're talking about there. No star. Okay, so let's go to the video I was gonna show you. Now, I don't know if you've seen any of the interview from this FTD guy. It was 9 days ago, but he said something. Oh, I haven't seen this one. Oh, I have a short. But this is going to give you some insight into what happened.
The stock settlement system that we have today, which has evolved through decades, values liquidity over almost everything else, meaning the system is designed to keep going. No roadblocks, no stumbling blocks. They want people to keep trading. So the system allows for, call it clerical errors. There is a time delay between when a trade is executed, and then there's another part of that trade called clearance, like you're clearing to land the plane, and then settlement is the landing of the plane. Well, the system is designed to keep going, to keep landing planes, even if some of the planes don't actually land, to get where they need to go. And that all is managed through this thing called the Continuous Net Settlement System, or CNS. So a fail to deliver can occur when stock does not arrive at the clearing corporation to close out a trade in time for settlement.
All right, so what he's saying there is that the system is designed for you to trade, right? And why do they want you to trade? Think about it. Every time you place a trade, they skim pennies off of you. So the only way that they could make money is for you to trade, right? And this is why they tell people, you could have sold over here, right? Or you could have sold when it was $25, right? Again, like each transaction, they make pennies off of it, right? Again, this is market makers and all that stuff. But again, like the perversive things about the system is that you have another arm that trade against you. So they get to see the order and able to trade. Hey, if a massive amount of people wanting to buy this company, of course I have a massive amount of liquidity here, right? And they don't necessarily take that money to buy shares. They just like, oh, these people are stupid. They think that GameStop is going to be $80. So why not? I'll just take their $80 and wait until, it hit 13, whatever, right? In order to buy that stock back. But what they've been doing is like egregiously doing so that they sold twice, right? Twice of the shares that it was existed, right? Again, I have no evidence that they haven't been closing or anything like that. But from what I learned about closing is that those people have to buy shares. Where is the volume? Where? We've been buying for 3 years, right? And many of you who've been here, I'm sure you've double, triple your position already. Because again, this is a good company. And again, I don't think Ryan Cohen really care about, whatever, how many short position, how many people are trading the stock, so to speak. He cares about the fundamental of the company, right? I don't think he's unaware of what's happening into this company, and I'm sure, they have ways to kind of subdue that, and we've been seeing it. Big Lot is another short squeeze, right? That's coming. First, it was AMC, Bed Bath & Beyond. Every single stock out there that have high short interest, they pump it to you, except GameStop for some reason. All GameStop is done, GameStop elitist and all that stuff, those type of names just kind of like make people kind of like believe that, oh, okay, GameStop is done, the next one is this, right? But again, it's like a concerted effort to do so, even until now. Like 3 years later, people are still saying the same thing. Oh, you're dumb for buying GameStop at $13 right now. Okay, all right, we'll see. It's like people were dumb for buying Tesla at $10, right, at its onset of the IPO. People would thought like, hey, you're dumb if you hold Tesla at $10 right now. Like, you better trade it. That's what famously Kramer was saying, right? Kramer right now want you to buy Nvidia. Okay, all right. He thinks there's more to come. Kramer also thinks there's a soft landing. Oh, maybe there's no landing at all for the market. Okay, all right, we'll see. But my point is that they want you to trade in and out, being antsy, right? Or again, that's how they make their money. The evidence that I have at this company, so the reason why, they want you to buy and sell and kind of like, oh, you're stupid because every time, people are buying up here. Look, you're buying at a $500. No, there's no $500 in the history of what is this after split, right? So this is the all-time high currently for GameStop is at 120 right now, right? And again, this is the tippy top of the price action at that time. So the highest it ever gone to during its height, when you hear about it in the news, was 120. So let's say you buy at the top, right? Wouldn't you, like, if you think GameStop is a great company, then that you would pay $120, right, for it, why wouldn't you be happy at 10th of the price right now? And again, this is why the amount of shares matter, and at what price you buy it at matter as well. I'm sure most people sold at this, and again, this is call option craze, like this, probably a gamma ram or whatever that's happening there. I'm only speculating, looking back over here. And this is why, you see a price drop dramatically, because people didn't exercise their in-the-money call option at the time. They didn't have the money to, or they didn't know that that's what they had to do. And so, but the second run was a real one. People were buying it left and right. And so, since then, you haven't seen anything close to that volume. But it's coming. I'm not doubting at all. Perhaps a year from now, when we have a full fiscal year of profitable quarter after quarter. I'm sure there are Wall Street people out there who are waiting for that, right? They are waiting for the company to prove themselves that they could be profitable for a full year. Then they would be reevaluating. And of course, they're not going to tell you that. The media is not going to tell you. When that happened, I bet you anything, can be silent. They're not going to talk about GameStop at all, even the negative news. Mark my word, because again, they don't even want that interaction at all. And then when they're ready to flip the script, maybe 2 years down the line, because again, they want people to forget about this company at this point in time. Forget about it, and so that people get bored. Traders get bored with it. They're not going to talk on the screen right here. Let me see. So 18 days ago, that was the news, right? It used to be every day there's something negative about this company, right? That the news want you to believe. There are times when in one day there's 5 different articles from Yahoo Finance about how shitty this company is. Look at this guy. Hold on. I think this is the guy who wants you to buy Dollar General.
We'll get 3 very different reads on the consumer and on 2 Ryan Cohen names after the bell today. We're talking Chewy, GameStop, and Dollar General in today's earnings exchange. Here with our trades is Lee Munson. He's Portfolio Wealth Advisors President and CIO. Tip of the hat to you, Lee. Welcome. Let's start with Chewy. Those shares have lost nearly half their value this year. Piper Sandler is warning on softening demand for higher profit margin items and declining prices in pet food. Interesting. JP Morgan, meanwhile, is bullish on revenue from its auto ship subscribers. How would you, Lee, if you want to, play this stock?
Well, the first thing that I'll do is, this is a trade. In terms of a longer term investment, I have some problems. Number one is that management is kind of Pavlovianly made analysts only focus on the auto ship numbers. Is it going to be 70? Is it going to be 75%? They're talking about how much sales per customer. That's great, but that's not the real story. They have about 20 million active customers. They did last year and the year before. We're not growing new people. Why am I going?
Okay.
going to pay 150 PE or whatever. Oh, and next year it might be 50 or 30. We don't know. Unless this thing can double the amount of people out there, I'm not that interested in. So I think that when you talk about where the option interest is and they're making a big move, this is all about what's happening right now. I think my problem with Chewy, it's kind of like a chain store. They can't open any more branches. And when you look at the last couple of years, sure, revenues are up 30%, but let's be honest, pet food inflation is up 30%. I don't see the growth. I think it's just a trading stock. Nothing wrong with that. My dog loves it, so I have to say that.
You think the pet trade is whimpering out? I get it. I see what.
Wow. Okay, so see how, because it's related to Ryan Cohen, so look at his face. It's like, oh, it's a trade for me. Like, yes, they have good numbers, but nah, right? Look at his demeanor when he's talking about GameStop. Look.
What's happening there? We'll move along to GameStop then, which is down nearly 20% this year, but coming off a retail-driven rally at the end of November. Obviously, it's been levitating. Wedbush watching the shift from physical to digital download games and softening holiday demand for other hardware like the Nintendo Switch. Retail investor activity, of course, always a driver of the share price. What do you do with this one, Lee?
I'm going to try to be mature about this meme
Mature.
stuff. Let's look at the last 5 years. Our compounded annual growth rate is negative 7%.
Look at how angry he is. Oh my God. Stay away with this company. It's like, don't buy this because I might go bankrupt if you buy this.
Our cost of revenues is going up, not down. So they got to pay more and more to make a buck.
A cost of revenue is going what? What did he say?
Rate is negative 7%. Our cost of revenues is going up, not down. So they got to.
Cost of revenue going up, not down. Okay. Is he telling the truth there? He might not be as educated as I think. No, I'm kidding. I'm just kidding. So he's saying that the cost of revenue for GameStop is going up. And that's a lie. Look at this. Like, how could you not know this? You are a leader. Like, what is going on? It's like, if you see this and you hear that segment, do you actually believe what they're saying to you, right? Really? And this is what happened when you don't look into it yourself. You believe these people, right? Because again, they're on TV, right? They're there seemingly knowing what they're talking about, right? And people believe this. People believe this because they don't look at it for themselves. It's ridiculous.
I pay more and more to make a buck. When you look at the only thing that grows about GameStop over the last couple of years is the collectibles line.
The only thing that grows is the collectible line. That's also a lie, right? So I'm just going to tell you that, and so you could look it for yourself. Like, do not believe me? Go look at the balance sheet yourself, if that statement is true. And he knows this. He knows this. Maybe he doesn't. Maybe he's just looking at the sheet. Okay, this is what I need to mention. And again, these analysts, they don't do most of them, they don't do the research themselves. I'm sure he believes it with all his heart right now, with the sheets that is right in front of him, right? I doubt that this guy is actually looking at the balance sheet of GameStop himself. So, but anyway, so just my anger in the whole media coverage here.
Meaning that the place where they really do well is selling more Pokemon cards and what are called Funko Pops, which are these little plastic doll things. But when you look at the ads and you look at their website, it's not about consoles, it's not about Fortnite, it's not about Call of Duty, it's about little plastic figurines and trading cards.
Okay, is that true? It's like, what the F? You've been to GameStop store before, right? It's not just about Funko Pop and all that stuff. Yeah, okay, there you go. Well, maybe he got a point there. There's a little tiny bit of corner there, Funko Pop. But this is what you see. This is about games. Console, pre-order. You get a discount right here. What is this? Headset. Yes. Like, what? Does this guy even do the research before he's saying the things that he's saying, right? So this is the misinformation that GameStop has to, combat in the media, financial media anyway. And I'm sure like people who watch CNBC and all that stuff, they don't have time to go out and canvass, the company itself. And this is why they rely on the news to do that. And this is why the news reporter has the job that they do. It's because, again, people are watching them because they have busy lives themselves. And retail, of course, fall prey to that, especially if you don't understand, just coming into the investing world, a couple of years, and you still have this rosy glass of how, the stock market is actually a good place to make money, which is true, but what they don't realize is the dark side of things, right? That perhaps just your trade is based on how many times can you do that exchange with them, right? How many times are you trading and all that stuff. But again, this financial head that they're talking about a certain company, that usually that they don't, well, I like to think that this guy is not that evil. Perhaps he's just uninformed about the company, because everything he's saying about in this particular segment is wrong about the company. See what I mean? And so I'm willing to give him the benefit of the doubt here, that he's probably just reporting on top of the report. That whatever paper he was given to say on this segment right here, right? So
Everything else is going down with this ship. Did they even get a COVID bump with all that stimulus money? No, they couldn't even do that right. So I don't have a lot of faith in this company. I'm not saying you should go short it, because again, it's a meme stock. What I would do is I would walk backwards and walk far, far away and find another company to buy.
All right, you're doing the move.
Okay, which company should we buy?
Walk away from that one, maybe to Dollar General, which is down more than 40% this year, but off of the October lows when CEO Jeff Owen was ousted after less than a year. KeyBank is watching for consumer trade down to the discounters and big competition from Dollar Tree and Walmart. They're bullish on the return of Ted Vassos as CEO, though, hoping he can address the sales decline and store safety concerns. Is this a chance to pick up the shares?
I think so. I love this thing at 100 right before Vassos came.
Oh wow, I think so. Look how happy all of a sudden he is. Like, of course you should buy Dollar General. Okay, well let's look at Dollar General real quick. And again, this is why I'm so. I think I covered this segment before. Yeah. We all know what Dollar General is, right? Okay, net income, great. They want you to think that it's 150. That's a price target right there. Had some dividends. That's good. Okay, let's look at the financial real quick. Hold on. Actually, before that, let's go stat. Enterprise. Lots and lots. And of course, like Moran's did this one as well. Diving deep. So go to Moran's channel and then search for Dollar General. Eye-opening, right? Of course, private equity is in there. So institution, of course, he would want you to buy into a 93% institution owner. Institution owns him, therefore he has to pump something that institution own most of, right? So is that fair, right? A good assessment, I feel like. So it's natural that, of course, that's why. And the Gamestop is retail, mostly retail owning it. That's why, again, the same way with Tesla, at one point, right? Let's see. Okay, what am I seeing here? So PE ratio 16. That's not too bad for retail. If you look at, book value, GameStop is actually better, right? Because it's like close to 3 times. PEG ratio, that's not too bad. Okay, what am I seeing here? The gross profit, net, 2 billion. Okay. Net cash, look at this. Net cash. So they only have $365 million. How much does GameStop have in cash? Anybody knows? Go check it for yourself. Like, I'm not gonna even show you. I might show you in some way, at some point, but at least they have more asset than liability. That's good. Look at the debt. They have 2.8 times debt versus shareholder equity. So that's bad, right? GameStop has what? 2 to 1, right? 1 debt versus equity. Good news is that they make enough to cover the interest payment, right? Just to compare to AMC, it's like negative, right? So the fact that they have +8, that's good. Anything above 3 for interest coverage is good. It just means that they earn more to cover interest coverage. It's just self-explanatory. Capital expenditure. So look at the capital expenditure, $1.7 billion. Okay, so I don't know what they use in the last 12 months here, but the cash flow doesn't even cover the capital expenditure. You see the difference there? That's why it's bad, you guys. Free cash flow, Now they might have other finance, trick that they do in order to kind of like bring the operating cash flow. So operating cash flow is also called cash flow from operating activity. Measure the amount of cash that the company generate from normal business practices. It is the amount of cash left after all cash income has been received. Okay, all cash expense has been paid. All right. Okay, what's the difference between free cash flow here? Free cash flow is remaining after spending. The company spent on everything required to maintain and grow the business. Okay, so this is what's left over from the operating cash flow. That's what I'm reading this, right? Okay, what is Gamestop? Okay, in my opinion, Gamestop is good, good company. That's why I'm like comparing it as a standard here. I'm biased in that, so be careful. Okay, so operating cash flow for GameStop is 145. CapEx is very low. That's good. Free cash flow is even higher than the actual, capital expenditure. So that means, again, like the safety of things, right? So free cash flow, that's good because it's higher than the capital expenditure. While Dollar General over here, their free cash flow doesn't even cover that. So to me, that's a higher risk than GameStop to be in, even though they make more money, And here's another thing too. See the Almond Z score right here? Anything lower than 3 suggests an increasing risk for bankruptcy. So again, it's just the indicator through and through. Dollar General doesn't compare to GameStop, right? I know they sell different things. I get it. They have different, customer here. But the point is that the health of the balance sheets for the company is not as grand as this person is leading you to believe, right? That he tell people to stay away from GameStop while promoting this as something, to be had. And on top of that, you have terrible leadership, right? You don't want private equity to be in there to try to, again, if the leader doesn't care about you, I don't care how much money you make. I don't care how much, net income you get at the end of the year, or trailing 12 or whatever. You're not going to get the benefit because the leader is going to eat before the troop here, right? Or equity holder. Sorry, let me read the chat real quick. Are you serious about financial cabal that doesn't want? Am I serious? I don't know. It's hard for me to not go there. The financial cabal and all that stuff. I really think it's all about the trading aspect of things. There's a lot of manipulation out there, right? And it's a tactic. The same way, I think, again, this is human nature, right? They want you. Here, let me see. let me address this real quick. How many language do you speak? Be more. 3. No, I'm kidding. 2. I like to think 3, but I'm learning Spanish right now. Yeah, thank you for asking. Okay, so it's not a cabal. I don't think there's a concerted effort in that front, but it's hard for me to believe, especially when they remove the buy button, right? Of course, like again, it's because of the brokerage and all that stuff, greed and all that stuff, kind of wanting people to win all the time. And when they lose one, they don't want that. So I don't know how you would kind of like make of that. But to me, that's at least anomaly that happens, right? Of all 60 years of the stock market, no one could argue that removing the buy button was the right thing to do, right? Back in 2008, did anyone remove the buy button or sell button in order to save people? No, right? And so there's certain people that could be safe versus somebody who couldn't be safe, right? And I think there's a network of groups that could do no harm, right? The too big to fail and all that stuff. And I don't know if that's a cabal. I don't know if it's a group of people who just doesn't want to lose or can't lose because, again, no matter what they do, including, illegal, quote unquote, illegal thing, like mismarking order. I mean, what do you make of that? Citadel was found mismarking order. And what did they do? They just accept waiver and consent, right? Just pay the fines and be done with it and not being held liable for mismarking order. And so what is that? Like, if I mismark my income on my IRS tax return, what do you think is going to happen to me? You see what I mean? So again, certain people get away with stuff that the rest of us can't. You see what I mean? And so it doesn't mean that they're more moral than us or anything like that. And on top of that, they use your money, right? My money, the 401k, the pension fund, all of that aggregately, Federal Reserve, there's a whole system here that it's very complicated for me to even address that. But yeah, I mean, am I serious? I don't have any proof, but I have inkling that it might be that, right? Again, the cabal, like that term, maybe just an over-exaggerating of what I'm feeling, but I'm more along the line, okay, there are a group of people that are not allowed to fail here. And I think that's the problem, at the very least, right? Because if you're too big to fail, that means no matter what you do, people are going to pick up the slack here. And usually the handful that are beneficial for that particular act or whatever, very few get to benefit from that. And why is this few better than any of us, right? I thought we're a free country here. I don't know. Again, to me, that's not fair at the very least. I'll just stop there. So let's take a look at this real quick. I don't know if I want to play the whole thing, but it's a really good advice though, you guys, and really gives me the idea of like, hey, at the very least, make sure you know who you are as a person when you're participating in the market, right? So let's listen in and I'll come back.
For Amazon, it's like 3.5% profit margin. So if it goes from 3.5% to 3.6%, that 0.1 change, I promise you, is worth tens of percentages, right? So that stock will go up 10, 20, 30% potentially if they can just change the profit margin. Because when profit margin changes today, investors understand that is going to be different for the forever future. This company has found some efficiency in the market, okay? Those little things that are super specific, nobody talks about on YouTube. Hey, this video we're gonna...
So what you just hear there is very important. He's gonna say it later on, so I'll let it play. but it's about profit margin. So
We're going to be talking about how the stock market actually works, the behavioral finance side of things, as well as technical investing, value investing, fundamental investing, and some of the best advice I've gotten from my time at Goldman Sachs. What I've learned from building a portfolio, actually 2 portfolios that are a total of about $5 million at this time. I'm going to be sharing with you guys the secrets because way too many of you guys are actually completely doing the wrong thing. I know I'm 30 years old right now, or almost 30, but I have some white hairs. I have some white hairs. I have some wisdom here, some experience. There's a reason why I have millions of dollars. It's because I went through all of these mistakes that you right now are making in your portfolio. Whether that's chasing profits, or going after hype stocks, or not picking the right stock selection, not choosing the right strike prices on options. I'm going to be covering all of these things and pretty much giving you some life advice on how to make more money, but also how to change your mind around making more money. Because with option trading and the stock market in general, what you have to realize is this is a biological game, not a financial game. If you look historically, the market always goes up, but there's lots of volatility. There's crashes in the market. Now, the reason why there's crashes is because people get really enthusiastic about the market. They end up, getting really happy and then over predicting what's actually happening in the market. And when the market pulls back, they end up having too much fear. They end up overreacting on the downside. So that's human nature. Success often lies in catching trends early.
that's important. Catching trends early, okay? In my opinion, we're early into this trend over here, okay? In my opinion, obviously. I'm biased, all right? But look at this, right? So the important part is like how much longer can this trend be down before it turns into the other way? The script's gonna be flipped, okay? And when the script is flipped, how many shares can you accumulate before that happen, right? You see this downtrend right here? Long 4 or 5 years of agonizing. Like, oh my God, the company's going bankrupt, right? But if you look at the balance sheets, you're zen, very zen, right? Because again, there's no sign of bankruptcy in this company, okay? Look at this. Even the Almond Z score tells you that, right? Every single thing in this company screamed better, right? Much better. But yeah, we could iron out the profit margin and all that stuff, like 0.1. Can that be fixed? Well, it's remained to be seen, right? How long can you hold on to this company before the uptrend, Again, sentiment has its way of changing, ebbs and bounds and all that stuff. But just like he was saying, people have the terrible habit of overestimating or underestimating something. And so it's your job to find the right one, right? In my opinion, Gamestop is the right one, right? Okay.
And riding those trends before they become mainstream. We've seen that all across the board right now with AI stocks, with technology companies, especially something like Nvidia, as well as other stocks like Tesla back in 2021. Now, Tesla's coming down a lot, and you need to understand how trends work to actually make money. It's not about fundamental analysis, it's not about technical analysis. It's actually a question of, do you understand other people?
If you are a trader, right? Of course, like if you are an investor, fundamental is all you need. So I would qualify that. He is a trader. Obviously, he's been trading for Goldman Sachs and have millions of dollars doing that. And he understands how to trade much more than me. For me, I'm just learning here. But in my opinion, fundamental doesn't really play in for the trader out there. And this is why when, Winthrop comes here and all that, whoever is against GameStop, they usually point out, hey, the price is lower than it used to be. Okay. Really doesn't matter what price, right? If the company's doing better and you have a lower price, wouldn't that be an opportunity, in my opinion, right? As an investor, long term.
Buffett says, be fearful when others are greedy, and be greedy when other people are fearful. Right now, the market is not fearful. The market at this point in time is doing very well. You want to be very cautious when the market is doing well, because when things are all like dandy and everything is good, that's actually the perfect time for you to be more cautious, because oftentimes the market does unexpected things.
Yes, and it's also going the other way as well. When people are fearful about this stock, oftentimes markets surprise you. You might get this stupid gap that makes no damn sense and then coming back down, right? It's like, again, like it's unexpected. And so as an investor, if you're accumulating, more and more. That's the key to the kingdom.
In fact, when I was working at Goldman Sachs, one of the most popular things, or one of the things that really blew me back, was this financial advisor who was managing like $1 billion. He said the point of the market is to make the most amount of people feel stupid. Literally.
Yes. So right now, everybody feels stupid about NVIDIA right now. It's like, oh, I should have bought money. I should have put money on that NVIDIA. Stupid, right? The same way with the sentiment on GameStop. You're stupid. You should have sold up here, right? Okay, I mean, you might have a point there, but who would have thought it would have come down here, right? Again, expectation, right? People expect it to go higher, and it's always going lower. But again, the key is look at the balance sheets, and you would be a lot zenner, right? And these big institutions, they want you to trade. And the reason why is because when you are making those transactions, they shave pennies off of you. And that's how they make more money than if you're just buying and holding something, right? GameStop, any company at all. I mean, Warren Buffett is famously saying it too. It's like the point of the market is to take money from the impatient and put it in the hands of the patient people, right? It's something like that.
The point of the market is to prove the most amount of people wrong, okay? So if you want to be successful, you cannot really look at what is happening out there in the market. For example, you can't be copying the most popular trends. You actually need to spot early trends before they are popular. That's why I always say, looking at YouTube for stock advice and basically looking at whatever is hype, like we see what's hype, right? You see those stocks being covered all the time. Those hype stocks are the exact stocks that are likely to pull back, and they're really likely to experience a lot of panic selling. You never want to invest in a business that you don't personally understand. That's why I tell everyone, you want to keep investing very simple. For me, I've grown a portfolio that's pretty large, right, at a pretty young age, and that's because I've stuck to very simple things. Yes, I've invested in things like Tesla, but I've done my research on Tesla back in the day, and recently it's been pulling back a lot, and I've shifted my attention to Apple and Google. And that's because I think brands and companies that have a strong brand are going to continue to do well.
And this is important for GameStop too, because brand is a lot more. And Ryan Cohen even talked about, how brand is good for the company. And again, it's a very difficult thing to do, and it takes time, especially with GameStop, right? Because there's so many negative sentiment out there that happened 10, 15 years ago, because when they start to short this company, what happened? You hear it on the news, like even till this day. Like, with new leadership, they still have that sentiment going on. So I think if anybody up for the challenge, it would be Ryan Cohen. And he was saying about how important branding is, just like Apple, Microsoft, and all that stuff, and Google. The slogan was like "Do no harm" or whatever, "Do no evil" and all that stuff. But you could argue right now, fast forward 30 years later, have they not doing evil things? Who knows, right? It's just, again, the slogan, the branding, and the people's sentiment about the company itself. And if you built it from the ground up, you can't please everybody, but the people that are your customer usually is the one that kind of like are brand loyal to your company. So I think GameStop is kind of gearing themselves up to that, and brick by brick, so to speak, right? The mentality is there and the drive is there for Ryan Cohen to do the same thing with Apple here.
The biggest secret in investing that isn't covered on YouTube is the little things. For example, margin expansion. You may not even know what that is.
This is important, right? Because again, people don't realize how great GameStop has been doing already, and this is why they come in here and say, I don't see any, what is it? I don't see any drastic change. I'm like, well, simple things needs to come first before they could do something amazing, right? And this particular comment is kind of like make me think, like, yeah, people don't realize how great something is. Here, listen.
Margin expansion is basically when you look at the profit margin of a company, is it going up? Because oftentimes, for example, I used to be an analyst for software and I was looking at Activision Blizzard, which is a company that is part of esports, they have video games, and I was taking a look, and basically because they had some software apps that had really high profit margin and that part of the business was growing, which in business school we talk about profit pools. When there's a company that has a small division that is growing very rapidly with high profit margin, that's actually a very good thing for the overall company. Now, obviously it's a good thing for the overall company, but why? It's because when the company actually reports earnings, the profit margin, say, for Amazon, it's like 3.5% profit margin. So if it goes from 3.5% to 3.6%, that
See?
0.1 change, I promise you, is worth tens of percentages, right? So that stock will go up 10, 20, 30% potentially if they can just change the profit margin. Because when profit margin changes today, investors understand that that is going to be different for the forever future. This company has found some efficiency in the market. Okay.
That's important. So let me play that again.
Overall company. Now, obviously it's a good thing for the overall company.
Hold on.
Is it going up? Because oftentimes, for example, I used to be an analyst for software and I was looking at Activision Blizzard, which is a company that is part of esports, they have video games, and I was taking a look, and basically because they had some software apps that had really high profit margin and that part of the business was growing, which in business school we talk about profit pools. When there's a company that has a small division that is growing very rapidly with high profit margin, that's actually a very good thing for the overall company. Now, obviously it's a good thing for the overall company, but why? It's because when the company actually reports earnings, the profit margin, say, for Amazon, it's like 3.5% profit margin. So if it goes from 3.5% to 3.6%, that 0.1 change, I promise you, is worth tens of percentages, right? So that stock will go up 10, 20, 30% potentially if they can just change the profit margin. Because when profit margin changes today, investors understand that that is going to be different for the forever future. This company has found some efficiency in the market, okay? Those little things that are super specific, nobody talks about on YouTube. Everyone's talking about the innovation and why the stock's gonna go up and the latest news. That type of stuff actually doesn't matter. The type of news that comes out that's live, it's already perceived by everyone else. You're not the first one to get this news. Everyone has this news, and the stock market adjusts really quickly to that news. That's because the stock market is an expectations game. Whatever is expected in the market, if there's a surprise, that's when the stock moves. Now, there is a...
Okay, what is the surprise for GameStop? It's going to be the profitability aspect of things. And again, so he was saying about the profit margin expansion, right? GameStop has been expanding their profit margin. Like, yes, it's still negative here, but again, look at how much negative is that is, right? And even just 0.1%, it's enormous, okay? So even if they could move this by 0.1%, in the future, because again, just like he was saying, company or this leadership has been finding the efficiency in forever, right? Like, yes, it's only going to, 1% today, but in forever, you could expand that more and more, especially when you account for like billions of dollars in sale, right? That 0.1% is like $10 million or $100 million, $1 million. So it's a very efficiency that you should be talking about. And let's look at the growth of the profit margin, right? So we used to be, the lowest was 21 right here a year ago, right? Now we're 24. So like 3 whole percentage here difference. He was saying how 0.1% was enormous, right? How about 3 whole percent? How is it not progress? Like, when people come in here and say, Ryan Cohen doesn't do shit. Okay, well, the evidence show otherwise, right? To me, this is a good, efficient company. Yes, they need to be more efficient. Like, I'm not saying, but again, like, they're gearing up for that. It takes time. Only been 3 years since he's been in leadership position here. Been 6 months since he's been a CEO. It's like, what the hell? Like, well, how much these people are expecting Ryan Cohen to do, right? And again, like, what is 3 years when he's going to be here for 30 years of his life? See what I mean? And so there's no rush here. Like, Okay, sorry, I haven't keep up with the. Hey, I won't talk about Moran's. Hey Manuel, you're in Moran's dog house, but you're a good guy. You'll figure out, and you won't. Okay. Be more. So, thank you. Appreciate that. It would be a great show with Be More. Oh. I know. No, I'm kidding. I don't know. I'm always so nervous, talking too many people. I don't know, just the mind. It's like my anxiety, and that's why I'm so thankful that you guys are here, kind of like be part of my audience here. It's always fun to interact with other people, but I need to practice more before I go on Moran's and not making a fool of myself here. But I appreciate that though. My mama said no. Not sorry, I don't know what you're talking about. Oh hey Amber, thank you. Gamestop can't stop, will stop. Can you give a shout out to Metal and AVL, please? I don't know what that is. Shout out to you guys. So if you know who you are, shout out. Thank you, Lynn. Let's see, Amber, let's go. Hey Gabriel, how's your watch list? Gabriel is guaranteed on a no-fly list. I don't know what's going on, you guys. Okay. What's going on? Okay. There's fighting over here. Okay. Children, behave yourself, children. I remember you got banned from our channel. Okay. All right. Let's stop fighting here. Okay. So, okay, what was I saying? Profit margin. Yeah, so the profit margin is like enormously more than it used to be. Now, I know we used to operate even higher than 24, but look, so can we reach 28, 27, 29? Can we reach 30, close to 31, 32 right here? So when we get back to that again, then the script's gonna flip, right? But just like he was saying, it's like, you have to be good at spotting the trend early and not listening to, the media. Remember, everybody right now think that GameStop is going under. Everybody is thinking right now that GameStop is a terrible company to own, right? I just show you a segment. And so everybody thinks that. So when the surprise element comes in, when we post positive balance sheets, people are going to be surprised on that. Again, they should have been surprised 4 times already. But again, it takes some time for people to realize what this is. It might be 2 more quarters, 3 more quarters, maybe 4, because again, there are people who are waiting to invest in this company. Wall Street, I'm talking about Wall Street, that have millions of dollars, and usually they want the company to prove to them that at least you could be profitable for, at least 4 quarters in a row, right? So, profitable, I'm saying like net income positive. How about that? Like I have to qualify that because we are profitable, right? We have positive cash flow for the 4 quarter already, and so it means that day to day we do make money. It's just that the financing of it, we need to kind of work on that, right? So, okay, let me finish this one.
Paradigm to investing, which is you need to spot new trends early, but most of the time those trends are smaller cap companies. Although I'm an advocate for going after large companies that are not growing as fast. So how do you balance this paradigm? Well, this paradigm exists in all areas of life. You need to mix around your decision making. Okay, so I have actually a decision making degree. I have a business analytics, data analytics degree. So in terms of mixing around your strategy, what you need to do is For example, in option trading, I personally prefer a little bit of poor man's covered calls, 5 to 10% in poor man's covered calls on big cap stocks. That's because, for example, big cap companies are very stable and growing, but they're not going to grow that much. That's why I would use a smaller, more leveraged strategy like the poor man's covered call to invest in stable technology companies. That way, when they do go up, let's say 10% in a given year, which is what the stock market typically does, I can actually benefit 20 or 30% because I'm using a leveraged option strategy that is safe. Now, I'm going to contradict myself because I said I don't like hype. But the fact of the matter is, some hype is okay, but you have to properly allocate how much money you want to put in to hype stocks. And that's because hype stocks are, in a way, very high growth, and they do have really huge potential. That's why they're so interesting to you guys and all investors, including myself. And that actually is very interesting because in finance school, I was learning about private equity. What private equity companies do is they give money, for example, like angel investors in Silicon Valley. They will take $1 million and they will give it to 100 different people. So they have $100 million and they give it to 100 people. Now, out of 100 people, to be honest, 95% of those people are probably going to completely lose money. They're not going to succeed. 4 out of those 100 people may make a small return. That company may turn into something. And then 1 out of 100 people, maybe will become the next Airbnb or the next Uber. And that investment will go from $1 million to like $400-500 million. So they can 5x their money just by finding one huge winner. And that's why it is interesting to invest in hype stocks. However, you need to properly allocate to hype stocks, for example, 2 or 3%. Like seriously, one of the best pieces of advice is you should have a majority of your money in very safe companies that you're just riding for the long term, because you're going to be investing for 10, 20, 30 years. So you want to have most of your money in safe companies. However, you want to have a portion of your money in riskier companies as well, because that's what makes life spicy. That's like the flavoring of life or investing. You want to have some risk, because maybe that small risk can turn into an outsized big return, which will make you very happy, keep you interested, and overall it can be good for your portfolio. And also, I just know that most people can't do the boring stuff, which is just have a portfolio that's full of Apple, Google, Microsoft, and other like really big S&P 500 companies selling covered calls for income, just like I do. You want to have some excitement. That's totally okay. I think you can have some smaller cap stocks. However, each one, again, has to be a small portion of the portfolio. And that does depend on the person. Some people, they can have 3 to 5%, and other people, because you have a longer time horizon, okay? If you have a longer time horizon, you can have even 10% of your money in riskier strategies. Now,
let me kind of address that, because like he talked about like poor man's cover call and all that stuff. I know what that strategy is. It's just to leveraging your fund. But I'm not going to talk about that. But one of those kind of common, he was saying that, you know, doing the boring stuff. Of course, like if you have a large sum of money, you know, like selling covered call on Apple right now, you need like $10,000, right? Just to do one contract. Hold on. What is the? Am I? No, Apple. Apple Inc. So not 10,000. Wait, hold on. So 100 shares of. Can't even do math. Goodness. My brain is jumbling. Okay, so yeah, you need $18,000 in order to sell one call. Meaning, like if you're selling covered call, that means you have 100 shares of Apple already. So most people don't have that, right? So those strategy might not work on Apple unless you have more than $20,000 in order to do what he's, you know, advocating people to do. I'm not saying that's unsafe or anything like that, but it's again, it's slow growth. However, you need that account. You need that money in order to buy 100 shares of Apple in order to do that. And since he's dealing with millions of dollars at a time, selling cover call on Apple is not a it's not a hard thing to do, right? When you have that big of a you know portfolio. I can't even think of big of the pool of money. What is that? Big principle of money? Am I? Forget it. But so for the rest of us, obviously, you know, you need a different strategy, and you know, again, in one account, I don't even have that. You know, less than 10,000 currently. Of course, I'm trying to build it up. And then my option one, of course, like I'm buying calls, buying put, and all that stuff. Currently, I have some call, like long dated call on Gamestop. Of course, I'm expecting the run, but again, at a very small 2 or 3 2 or 3 contract in the money, long dated. It's called leap call or whatever. You know, it's expire like in 2 years. So, in my opinion, that's a little safer than the you know, short dated one. But again, that's just my opinion here. I'm expecting the run. That's why I did it that way. Now, if it's in the money call, again, like there's a less risk of you not having, like the value of the call does drop pretty substantially. But again, like I have 2 years to prove the direction of the stock price wrong. See what I mean? So I hope that makes sense. But option, again, it's like it's a very risky thing. That's why I only have a small amount there. I'm trying to you know, to learn different strategy here in order to try to beat the S&P 500. It's pretty hard to do, but I like the challenge, right? It's part of the spice of life, I guess. It's just like he was saying, like, most people don't like to do boring stuff, which is understandable. Again, like they don't like the slow growth of things, and which is fitting why people coming in here and bashing on GameStop, because it hasn't done anything amazing yet, right? You haven't seen the run that you saw 3 years ago. And you know, to me, this is an opportunity. Again, like I'm trying to spot the trend before it happens. Imagine DFV over here, right? He was spotting the trend and people were bashing at him, right? Oh, you're stupid for buying into a dying company. You know, they're going to file for bankruptcy. And then what happened? Ryan Cohen got in. This is what the catalyst is. This is what the surprise that you see. Anyway, so I'll let you finish all this one if you want to kind of Google his channel right here. Go ahead. I mean, he has good advice there. This is the first video that I see of him. So that's that. Let's see. What's another one here? So back to the trading one. Reconnected.
For every trade, there's a buyer and a seller.
Sorry. I don't know what happened there. It got disconnected for a little bit. Hopefully you're back. If not,
For every trade, there's a buyer.
Okay, so don't know how much of that you heard me. Okay, so I left off of this particular video right here, but I want to show you another trading one right here.
The buyer of those shares, or the person to whom they are owed, rarely has any idea that there's been a fail to deliver.
For every trade, there's a buyer and a seller. And if I'm buying shares from you, we can agree to that at one point in time. And then you actually got to give me the shares when I give you the money. But sometimes I give the money and my broker says I've got shares, but I didn't actually get them. Right? That's the failure to deliver.
And what's interesting about the system, to piggyback on what Dave is saying, what's interesting about it is money never fails to deliver. The money always changes hands, right? It's the shares that sometimes don't get where they need to go. You would think that the counterparties to that process would get upset about it, but most people have no idea. Because of the structure of CNS, the system keeps clicking along, and the buyer of those shares, or the person to whom they're owed, rarely has any idea that there's been a fail to deliver.
Failure to deliver is like that. But again, like, you know, if you look at the failure to deliver right now on GME, it's hardly any, yes, but where is the delivery of shares, right? When you buy into the market, usually the price will go up, right? Why is there no price action whatsoever? People are not trading this, right? We know about the on volume balance, right? On balance volume, am I saying it right? OBV. Oh, wait. Right here. So what is this indicative of? You know, think about this. Like, look at this, right? Just means like anytime there's volume into this company, it's always a buy, right? But when it's a volume of selling, look at it. Hardly anybody sell. The selling pressure is lower than the buying pressure. Always. Look at this. Okay? Boom. And it's immediately right here. And so over time, yes, essentially over here, it seems like, yes, most people were selling more, so to speak, but it's still, see this price right here? It's lower, but look at the volume. It's higher than the previous volume. So that's the diversion right there. Is that crime? I don't know. It's just anomaly, in my opinion, right? Right, there you go. Unless I just don't understand what on volume balance is. On balance volume is. Somebody need to tell me that. But I don't know. You see, like there is a discrepancy there. So you would expect this volume, selling volume, to be a lot lower, right? Usually it does follow the price action. And so, is that indicative of people just holding the stock? I don't know. Again, like you have the DRS people, and then you have people who are accumulating the company in shares, right? And if you look at the option stuff too, let me see the chain for today. I haven't looked at that one. Hi Amber, thank you for coming back. I know I was kind of disconnected a little bit here. Fake Amber, you need to stop using my name. Oh man, what is going on, dude? I'm sorry, Amber. Amber is a common name. Yes, valid point. I'm sorry, Amber. So which one is the real one? Which one is Amber? You see, like stuff like this makes me kind of convicted in this play, because again, there's so many fake accounts of real people that is being made in order to kind of, I don't know, infiltrating the chat, saying, perhaps, I don't know, because Amber is a fan of GameStop, wants to buy GameStop, invest in GameStop, and then later on, I don't know, again, like, what is the point of those fake accounts? I don't understand it myself, but, in my opinion, I think there are a concerted effort into, making perhaps a mockery of what GameStop actually is. But again, like if you don't see the data that I present to you with the balance sheets, I don't know what else to tell you, Like that's why go do your own research. When you hear people tell you cost of revenue goes up when for this company it went down, what's going on there? Like, why? Why are they telling you that? Are they misinformed themselves, even though they're on TV telling you that? Or on a very financial, well-known financial network here, and nobody bat an eye, nobody's like, oh, wait, actually this, right? Again, there's no pushback in those type of information. So that's another red flag too, when you don't have somebody who actually say, the interviewer should have known better to like, oh wait, actually I see this, what do you have to say to that? They just let the guy speak nonsense about GameStop, right? I'm referring to this gentleman here, for those of you who missed the whole video. But anyway, back to the fake account thing. It's just so stupid, and I'm sorry, Amber, that it happened, that people are doing that. Like, it makes no damn sense to me. The one with more of the red part of GameStop is the real one. Okay, so this one right here. Yeah. Okay. The one. Okay. Bernard Star make this big account. Okay. Have something real bad. Okay, they're playing too much. Quit playing games, my heart. I think this is the fake one right here. Taunting. I know, like, you guys, like, what is the intention of being fake and all that stuff? Are you paid to do that? It's like, does it pay well? How much are you getting paid doing that? Like, or it's just, again, human nature of, like, saying how stupid we are in investing in this company. And so there's concerted effort to make this community as if we're just dumb, stupid, and doesn't know what we're talking about and all that stuff. And yeah, I mean, I'm dumb in one part of my life, but I'm trying to strive to be a better investor, right? And so that's the journey. That's where my journey began, is this right here, right? Doing my own research, doing my own math. And to see if is it true about this company. And I'm in here to try to convince people to do the same, in the sense that, hey, if you look at the data and you come in a different conclusion, then okay, at least you look at the data, right? At least you look at the number yourself. And so I have a different opinion on this company. If you think it's a shitty company, that's what market is all about, right? Like, who's right and who's wrong. It's only time remains to be seen here, right? Okay. Be more the one that typed quit playing games so hard. Yes, I think I got that one. Thank you, Amber. Appreciate you. But I'm sorry that happened. See, I hate it. I hate the fact that people do that. So be more. You're awesome. I have a long journey myself. That's good. Thank you. How many languages do you speak? 2, yeah, of course. But I like to say 3, because I'm learning Spanish. ¿Cómo está? Muchas gracias. Okay, I'll watch her later. Be more running. Okay, thank you, Emma. Appreciate you. You don't miss much, so just do it at your own pace. Usually, I'm just babbling on about GameStop and other media personnel who trying to bash GameStop. But yeah, I'm kind of at the end of my stream here.
For every trade, there's a.
But if you want to watch this particular video right here, go check it out later too. It's Irvin Finance. I know Marantz doesn't trust Dave Lauer. I think it's just, for me, when I watch this, it's more about the education, like the market structure and all that stuff, how it works, how it comes to be, why certain things is the way that it is, and all that stuff. Now, this is the one that I mentioned before about the XRT. It's the ETF that has a lot of GameStop in it. And so let's see. I hate the fact that they still, kind of couple AMC together with GME. I don't know how innocent that is, I'm sure with Dave Lauer, I think he's more like the structure guy. I don't think he cares about the management of these two companies. So I hope that people, kind of know the difference between the two here. Because again, like, there's concerted effort to kind of tether these two together. It's like, what happens to AMC is going to happen to GME type thing. So it takes a smarter person to kind of, or at least longer investor in both to know what's going on in both company here. So in my opinion, I already picked my winner here. So you need to come to your own conclusion too.
Yeah.
the question is, how does this still happen? Well, first of all, there are lots of ETFs on the list. I don't have a good answer to that. There are interesting theories as to why it is that the ETFs can remain on the threshold list forever. Like XRT, the S&P retail ETF
That's one of our questions is about
is
XRT.
on there. It's been on there since 2009. It's been on there for 15 years. And I've never gotten a good answer why. I haven't had, and no one's ever been able to give me a good answer why.
So 15 years.
It's been, as far as I can tell, plus or minus some periods off, XRT has basically been on for, call it 80% of 15 years. And I've never received a good answer why. I do believe, and I've had this told to me by people in the stock loan world, that you can use in stock lending, if you have a stock that's hard to borrow, that's part of the basket of XRT, that there's a way to create a synthetic short position where you're kind of short the basket and long everything that isn't in the basket, or the opposite of that. I guess you're long the basket and short everything in the basket except that one stock. You essentially synthetically short that one thing that you can't short. And so you create.
So can you do that as a prime and then offer that as a locate?
I would think that's the question. I don't know the answer to that.
Okay.
But to me, that seems like the most reasonable explanation of what's happening is you have some type of a synthetic desk, some Delta One desk at a bank that is engaged in these transactions that offers this as a source of locate. Because that locate requirement has never gone away. That's never been changed. Other things have changed in Reg Show, but that never has.
But even if you have that as a locate, it's not like you can deliver that. It's not like you can actually borrow the underlying.
So I mean that's a segment. Just again explains how they're doing it behind closed door. Of course, like when they say synthetically short, it just means it's shorts based on the ETF here. They could create that effect of shorting it, even though they don't go directly shorting the company. Meaning, if they want to do it to Gamestop, obviously, they could do that over and over and over again. But if you look at the short position for XRT, I don't know who posts the XRT short. I don't know if they have the thing. Hold on, let me see this real quick. Okay, where did I see that? Carvana, you have Abercrombie and Fitch right there. Bed Bath and Body Works. Bed Bath and Beyond. Unknown country, top country, unknown. They own more of this, offshore account, right? I don't know. Again, part of the cabal. I have no idea. But look at the short interest, you guys. What is this? Is this part of what? Now you might say, "Oh, this is probably a terrible website. Maybe a fake website. I don't know. ETF channel." Let's look at Gamestop here and see what it comes out to be. So that's XRT just now. Shorts 300%, but it doesn't come out to. Survey with the stock inside. Okay, hold on. Oh, they have the ETF inside buyer ETF right here. That's cool. Learn new things again. But anyway, so that's an ETF website here. I want to see XRT. So XRT is an ETF that has a basket of retail stocks. And if you see the list right there, Right now, they have more of Carvana right there. Of course, Carvana is a terrible company, right? I don't know if it's a good one, but we know that it's private equity. 2%. I think the reason why it's 2% now is because it's been running up like crazy. But what is GameStop here? What number is it on there? I don't see it here. eBay, AutoZone, Best Buy. Oh man. Come on. Oh, I can't. Boom. Lithium. Wow, I don't see GameStop here. Ulta Beauty, guess. Nordstrom, Foot Locker. I mean, it could just be because of the nature of the market right now. They expect XRT to go down because it's a retail sector. So the short position, but again, like, look at this. Percentage of short shares, 300 something. So outstanding, again, this is due to the greed of you know, of the people that are, again, like when they sell you those shares, they don't deliver it. So people who buy into XRT, you know, as an ETF, now that could be a pension fund, 401k investor, right? Billions of dollars, or they would kind of try to buy this ETF to try to outperform, you know, at different times, right? And this is what people do usually. But yeah, that's 300% shorted. How is that possible? Again, I might not understand something about the nature of ETF, so it's hard for me to speak of that, but just the appearance of there's more shorted shares than the actual share itself. That's the problem, right? So what is the hold on, change. So the price is right here. Outstanding shares is 5 million, right? 5.8 million shares for this particular one, but yet the shorted shares is 19 million. So what gives, right? Why? So in dollar terms, that, let me see, what is that? If you were to try to figure out the price, right? So if it's 74.6, let's say I want to buy it at this price right here, right? That money, it's not going towards the actual share in the market to cause the price action to go up. Even though I want to buy it at this price, my order doesn't hit the lit exchange, but it sit in somebody's pocket, right? I want one share of XRT. So where does that share go? Well, usually it goes to the shorted share right there, just sitting in there, right? Again, like if they know that the retail sector is not going to do well, you know, the people that took your money, even though they sell it to you at this point because you want to buy it at that point, they might not want to buy it back. But at what price are they going to be like, oh, okay, this is fair value? And so nobody should have the ability to do that at will. It should be the market that decide that, right? It should be say, oh, okay, other people don't want to buy it at 75, because if I buy it at this price, I want to make some profit, right? The only way that I could make profit is if it goes to 75. Somebody else is willing to pay for that. So the market should be like, should be fair in that sense. Like, okay, if people are not willing to buy it at 75, it should come from the market, not what Ken Griffin, right? It's like, oh, we're institution because we know better about the pricing of things, right? Crazy. So, okay, if that's the case, why do you sell it to me at $74, right? Wouldn't it be more fair for you to be like, okay, you're overpaying, right? Like, it doesn't happen that way, right? And that's another thing. It's like, why is it allowed? If one institution could be like, okay, you're paying too much for this company, you're paying too little for this company, you're supposed to buy NVIDIA at $800 because that's what the price of the company should be. Then what's the point of the stock market? What's the point of trading? Right? But again, it only happened the other way, to where, and that's a dangerous place to be. Because no one person, no one institution should be able to do that. Because, there's self-interest, there's self-conflict, conflict of interest always happen because humans just, again, greedy. So, anyway, I'm just ranting. Okay. Once, I don't know what that is. It wasn't Kenny. It's Grave Flockin. Yeah, I mean, I don't know if it's, but might be initially, yes. Initially, they thought that, they have this company under control, right? That's why they're so egregious in not delivering shares for people, because they know for sure that this company is gonna go under, and they didn't expect Ryan Cohen to jump in and was able to be successful at driving people away from the company, people that they planted. And again, that's why they load on debt and they overstored GameStop in order to, again, spread GameStop too thin, and making them difficult to increase in value here based on the amount of debt, interest payment and all that stuff. Remember the senior notes and all that stuff. And when you are borrowing against the future of the company, right? And so if you have a leadership that doesn't care about the future of the company, they don't care about loading the debt, right? Because at some point, the leadership is not there for the long haul. And so the fact that Ryan Cohen pay off debt, right away, it just signified to me as an investor in the company that he cares about the future of this company, right? Care enough to not over leveraging the asset of the company. And so, again, like, how do I know this? Well, it's evidence based on the action that is doing that he's done so far, right? So. Plockin kin with Plute. I don't know. I think that's Polte, right? Alright guys, that's all I have. I know I'm ranting about 2 hours already. But yeah, thank you so much for joining in, everybody who kind of tune in. But yeah, you don't miss anything much if you want to stream it later on. But I'll be always appreciative of people coming in, putting their 2 cents in. And I despise people who are, creating fake account, coming here, I don't know what the purpose is of that. I could speculate on the purpose, but just don't do that. Like, why Why taunting people when you don't have to? Why taunting people when you could spend your time doing something else much better than in your life than coming into a small YouTube channel to try to do what? What are you doing? But yeah, appreciate all of you. Okay.